Hello, my name is Steve Bigelow with the Candlestick Forum. The markets have put us in a condition of not knowing which way investor sentiment wants to move this market. We saw on Friday a big sell-off in the Dow, again, confirming our ultimate criteria that you're in a downtrend until you see a candlestick buy signal to close above the T-line, giving you the better prospects of being in big trades to the downside, as long as you aren't closing up above the T-line. However, today we did a bullish Harami in the oversold area, but it failed at the 50-day moving average, and our ultimate criteria still is we're below the T-line. So even though we might have seen a bounce today, that doesn't necessarily mean they've changed the overall investor sentiment. Same scenario here on the Nasdaq. Did a bullish type kicker signal, but look where it closed, just below the T-line. This means we still require more confirmation to know whether to start covering short positions or going heavily into long positions. Short positions were obvious. Peloton, which had been hit pretty hard on Friday, it opened at the T-line and closed lower. Today, it's still trading lower. What's the assessment? We're still in a downtrend with probably a safety stop at the T-line. Same scenario on Twitter. Gapped up big today, but where did it close? Still closed below the T-line. When do you cover a short position? When you see a close above the T-line. So that T-line works as a very relevant piece of information to tell you what to be doing, especially when you see prices gapping around. In this case, when Twitter gapped up, looked like it was time to cover short positions, except as soon as they started turning this candle red, that gave us the inclination that the buyers aren't there. We'll cover if they bring it back up through the open. And they never did. So this is the graphics, the candlestick analysis, telling you what investor sentiment thinks about particular positions. We're still heavily short in positions because they've never closed above the T-line. However, we're also long positions. You can see the lithium mining companies have been acting well. They haven't been able to close below the T-line, which tells us this uptrend's still in progress. LAC, a good buy or a good hold, but SLI is one that's showing good resiliency. The electric vehicle sector can never close below the T-line. Now remember, they could not close below the T-line, and they didn't really sell off. They were actually being bought after the open on Friday, and the market was down 900 points. That's telling you there's relative strength. You don't need a relative strength index on your charts to tell you they were still buying even though the market was selling off. So as long as they stay above the T-line, our recommendation on GOEV also is based upon kind of a J-hook type pattern bouncing off the T-line, still in a strong uptrend. So right now, we need to have more confirmation of whether the bullish Harami stopped the selling or whether this was just a bounce. So it'll be important to see how they open these markets tomorrow. How they open the markets on any given day is what is the first clue on, if you're a day trader, which direction you want to go based upon candlestick signals that produce high probability trade setups. This is what we're going to be doing on Saturday, this coming Saturday, a mini spotlight session. Usually supposed to last for an hour, figure on an hour and a half. But what it does is we're going to illustrate what the high probability trade setups are based upon market direction that give you not only a good direction of where you should be trading as far as a day trade, but which ones have the magnitude that if they open correctly, they're going to produce a good potential profit. So with that, everybody have good trading. We'll see you in the chat rooms.